We'll be covering a number of different topics during today's presentation, and we'll have several guest speakers. First, we'll discuss the latest developments in efforts to improve the CPA pipeline and provide alternative pathways to CPA licensure. Then Nicole DeRosa will provide a federal tax update. Next, we'll discuss legislative and advocacy issues on the New Jersey and national levels, including recent news about BOI reporting. Then we'll get a New Jersey Division of Taxation update from Director Maria Scarata. And we'll talk about issues impacting CPA firms, as well as professional issues impacting all CPAs and accountants. So let's get started. I'm joined today by AJ Johnson, CEO and Executive Director of the New Jersey Society of CPAs. Welcome, AJ.
Thank you. Pleasure.
And June Toth, Principal at Wilkin & Gutton Plant and NJCPA President.
Thank you very much.
And today we have a special guest, Carla McCall, Managing Partner of AICPA and Chair of the American Institute of CPAs. Welcome, Carla.
Thank you. Pleasure to be here.
You're about halfway through your term as Chair of the AICPA.
Yes.
It's been a busy year. Can you tell us about your work so far and priorities for the remainder of the year?
Yes, thank you for that. I have three focused priorities, and the first is value and sustainability of the profession. And I know we're going to talk a little bit on these topics today, but when I talk about value and sustainability, what I'm talking about is looking at how we are changing our business models as organizations so we attract and retain talent, right? We need to evolve. We also need to promote our profession. What I have found getting into high schools and even universities to some degree, young people don't have they have a dated view about what we do. And so really talking about how we're doing our work, how we're using technology, talking about the cool projects that we work on so they know, where we stand in, owning public trust, which is an awesome responsibility, and how we help our clients. So it's telling a better story. Second, driving innovation and transformation. So I believe we need to continue to stay at the leading edge of technology transformation and digital transformation. So I'm talking to members about how to do that, things to think about, sharing what our firm is doing. And then third, promoting inclusion is really important. Our firm has a significant focus on diversity, equity, and inclusion and belonging. I think it can help pipeline cost and time of education. There's a lot of benefits. And I've seen firsthand in my firm, when you have diversity around the table, you make better business decisions. So that's a little bit about my platform. Thank you.
Oh, that's great.
Yeah.
So the comment period for the AICPA NASBA competency-based experience pathway exposure draft ended on December 6th. And the UAA's proposal comment period will conclude at the end of the month. Can you tell us about any updates that you can share?
Sure. Yeah. I mean, everybody's familiar with MPAG, the National Pipeline Advisory Group, right? And the sort of the punchline to their data-driven, they took a year to get at real data, right? Surveying students and professors and members. And their report came up with a multi-pronged approach with some of the issues, right? But the licensure is one of them. But their punchline really was to future-proof the profession. We really should look at competency-based licensure. Now, I love that because I am a big proponent of competencies. We have them written in our firm. I believe in measuring people on output, not input. And so moving from hours to something else makes a whole lot of sense to me, especially as universities are rolling back bachelors to 90 hours in some cases. So I'm all for future proofing. But obviously the 150 hour is a burden. With time and cost of education was one of them. So we have two exposure drafts out, one closed already, I believe it was the competencies, and then the other one is open till the end of the month. I've received some comment letters directly, and I want to just say thank you to our members who were so thoughtful in their responses, and not only just agree or disagree, but offering solutions of things that we could think about. What we're going to do is, upon the closure at the end of the year, is go through all of the comment letters and then revise the language. Our goal, and what we heard loud and clear from firms of all sizes, was mobility was really important. And so the only way to really preserve mobility is to have all the states aligned. And so I'm hopeful that we can get there. But I, as a major firm managing partner is preparing my firm for a break in mobility potentially. And that means that I went to our talent management and said, we need to now start to track all our CPAs, and the licensure isn't about signing CPAs, it's all CPAs. All our CPAs, what state they were licensed, under what rule, and get ready to marry that to resource management. So we have clients in 42 states, we have employees in 22 states. So we need to make sure we're not deploying CPAs in states where they might not be able to work. And so I'm getting my team ready for that, but I am hopeful that we can, as a profession, sort of align around something after the comment period, maybe with some changes that won't break mobility, because it's going to be really hard to put back together.
I mean, I think that that's something that our entire profession is concerned about.
For sure.
I know that we have also submitted a comment letter to both of these. Do you want to share our position on that?
Sure. So in September, our Board of Trustees unanimously decided that we support the bachelor's degree with 2 years of experience, not the competency model. We did express a high concern about maintaining or building in mobility. So we have aligned with California and several other states' proposals to that end. And we also look and believe that if, to your point, Carla, if all the states are aligning and future-proofing, and I believe there is something that has been considered in terms of maybe revisiting in a certain number of years so that we won't be back at a position of, well, now what do we do? And trying to get all of the states together on the same page again.
Yeah, I think the AICPA's position on the competencies was, if our ultimate goal is full competency based, if we have a track record of being able to manage the competencies, it's less, of a lift to get to a full competency model. We use competencies in our performance management in our firm. So for me, I don't see it as a big lift because we have to review people that are working on our jobs anyway. So it seemed like it made sense, but I'm a champion of the profession. So whichever way we go, I'm going to support it.
Yeah. And I know that a lot of people feel that the exam is the competency, right? That if you pass the exam, that is the thing that makes you a CPA. I think that's what I've heard from different members and across the board. But anyway.
I have confidence we'll figure it out.
I do too.
And I would just add that we've surveyed our members on this, and they indicated that maintaining automobility is a priority. I think that's the case for everyone. And so at NJCPA, we've taken all of that feedback very seriously, and we've looked at it very carefully. And we want to make sure that we all work together. I think that's the key to be able to preserve automobility and not take away, practice privileges across state to state.
Right.
So I think that it'll just require us to work closely together and see, let's see what comes in for the comments, and hopefully we can get there together.
Yeah, you're just going to have to prepare your members. You have a neighboring state that is not going to do automobility. And so, those members can come into your state, but your members will be limited about practicing in their state. So you'll just have to have resources for them, I think.
Yeah. It'll be interesting to see a summary of the comments.
Yeah.
I mean, because I think you got all these great brains working
for sure
right together, and I'll be interested to see anyway.
Yeah.
So a summary of the comments will be presented?
Yes. So from what I understand from Sue Coffey is that they will present all of the summaries like they do exposure drafts, which I'm not super familiar with, but it'll have, the topics basically and the percentages of yay, nay kind of thing. I haven't gotten an update yet as to what it looks like right now. I heard it was balanced, but that was like 3 weeks ago. So who knows? I've been getting comment letters in the last 2 weeks. So yeah.
As you know, profession is very deadline driven.
Yes.
Oh, December 6th, we'll get it on December 6th.
Right. It won't be every individual by name, but themes.
So AJ, what is our pipeline advisory advocacy group working on?
Sure. So our work group has 8 phase 1 initiatives, and I'm very excited because we've gone from, looking at the priorities to identifying next steps. So our initiatives will include drafting legislation for the alternative licensure path. We will continue to work on STEM-related tasks, and we supported AICPA and the effort to include accounting as a STEM-related subject. So we will also work to increase accounting education in New Jersey high schools and strengthen relationships with our educators. If I may, I do want to thank our pipeline advocacy work group members. They've been very diligent in just being considerate of all of the issues and where we can get started. And we partnered with NJCPA as well. They helped us to look at this in their report. And so now we're actually able to identify those actionable steps.
That's great. Great. So we've talked a lot about the pipeline and how it's a profession-wide initiative. Carla, can you share how the AICPA's Pipeline Pledge supports this?
Yeah, sure. I mean, the Pipeline Pledge was created so that all members could sort of look at what would move the needle on this. And if you think about it, we have 475,000 members even just in the United States. If every member did one thing, how much quicker we could move the needle, right? And so there's a choice, and I've circulated this within our own firm. I'm encouraging our team members to go back to their high schools, to talk to high school students and be super transparent about the work, about technology, about earnings potential, get into universities, talking to the professors, encouraging professors to keep an external view of how we're doing our work so they can inspire students as they're making a choice of major, right, when they get to junior year. And then being a mentor, there's a whole list of things. And I truly believe that it's all of our responsibility, each individual member in our profession, to promote it. And if we all do one thing, how powerful would that be?
Right, and giving people the ability, your staff, to do these kinds of things, right? So that's how the firms can help too,
Exactly.
right? They can say, yes, I support you going out to your local high school or college.
Yeah, and even people in business and industry, there's some pretty cool CFO stories out there, right?
Right.
That are working in brands that young people align with.
Absolutely.
So that would be amazing.
And we've already committed to the Pipeline Challenge. So we're already doing a lot of work with our partners. So Junior Achievement of New Jersey.
Oh, yes.
We had a whole student outreach just a few weeks ago, actually, and a lot of our volunteers came out, met with hundreds of students. So that's just one example, and we'll continue that work.
Excellent.
Yeah.
Good.
So we do have a question. Carla, this is directed to you.
Okay.
What do you mean the goal is full competency based? Does that mean the other two legacy methods would not be applicable?
Yeah, so so the competency base would be if someone could demonstrate the competency, they would earn the license. That's future proofing, right? So does it mean replacing the others? I don't know. I'd have to ask someone on NPAG that. I think so, potentially it could, if we move in that direction. And they looked at other professions that are competency based to say, okay, how are other professions licensing? And so it's not about hours in or years of experience, because people could develop those competencies differently and at different points of time. So it was sort of moving away from the time element, but happy to get back specifics on that question from the AICPA.
Oh, thank you.
Yeah.
So now I'll turn the program over to Nicole DeRosa for a federal tax update.
All right. Hello, everyone. So first and foremost, the IRS has begun its annual shutdowns in order to prepare their systems for, dare I say, the upcoming tax year 2024 filing season. For individuals, the shutdown actually already occurred back on November 30th, which was actually a week later than last year. So they gave us an extra week. But for businesses, the shutdown is actually scheduled for Thursday, December 26th, which is literally the same exact day that it was last year. So merry day after Christmas and happy first day of Hanukkah for all of us practitioners. Similarly, the reopening date in January 2025 is to be determined at this time. So we'll kind of do like a wait and see approach as we normally do. All right, so let's talk taxes, my favorite, of course, especially as we patiently await the much anticipated year-end extender package, which honestly, who knows if and when anything will be passed. I'm not a gambling gal, but if history does repeat itself, which it typically does, I wouldn't bet on a year-end extender package. For now, though, let's talk about the things that we do know. So next slide, please. Some of the more notable provisions that are set to expire in 2025, assuming no legislation is passed, which is, not really that likely on the individual side, they include the rates and bracket entry points, which will revert back to pre-2018 structure, with the top rate going back up to 39.6%. It currently obviously sits at 37%. We all became very familiar with that. Standard deduction will revert back to pre-CGMA levels as well, which will be adjusted for inflation. Personal exemptions would be reinstated for individual exemptions, which include exemptions for the taxpayer, taxpayer's spouse, and any dependents. Child tax credit would revert back to $1,000 per qualifying child, with a portion being potentially refundable depending on earned income, and modified AGI levels. So more money, more problems, and less of a tax credit, of course. The other dependent tax credit would be poof, gone. That was not prior, that did not exist prior to Tax Cuts and Jobs Act. Itemized deductions changes galore. In a nutshell, no more SALT cap, PEAS limitation would be reinstated and then indexed for inflation. And those 2% miscellaneous deductions would be back into play again too. And I know that there are so many people that would probably be very excited about that. AMT exemption amounts and phase out thresholds would return to pre-TCJA levels. Lifetime exemption for estates would revert back to, again, pre-TCJA levels, which is estimated to approximate about $7 million in 2026. Next slide, please. Some of the more notable provisions that are set to expire now on the business side include the QBI deduction that would poof, be gone as well. Excess business losses, they're now set to expire in 2029, since it was extended 2 years by the Inflation Reduction Act. Bonus depreciation, I feel like this is always kind of front and center, but rightfully so, it is a biggie. We got pretty used to that 100% bonus for a while until it finally started to phase down to where it currently sits at 60% for 2024. And it's slated again to drop to 40% now in 2025. 20% in 2026 until it expires if no legislation is passed, which I honestly don't believe this is likely, as we've already seen some movement earlier this year about reinstatement of bonus. It'll be back. It's not necessarily going anywhere, but that is one thing I am certain of. Amortization of R&E expenditures, and then limitation of net interest expense under 163J. So switching gears now to 2024 update on the individual side. Next slide, please. Tax planning is essential as ever for taxpayers looking to manage cash flow while paying the least amount of taxes as possible over time. As we rapidly approach year end, now is the time for individuals to review their 2024 and 2025 situations and identify opportunities for reducing, deferring, or accelerating their tax obligations if they have not already started to do so. Taxpayers should always consider whether they can minimize their tax bills by shifting income or deductions between 2024 and 2025. Ideally, income should be received in the year with a lower marginal tax rate, and then deductible expenses should be paid in the year with the higher marginal tax rate to drive that rate down. If the marginal tax rate is the same in both years, deferring income from 2024 to 2025 will produce a 1-year tax deferral, and then obviously accelerating those deductions from 2025 to 2024 will then lower the 2024 income tax liability. I personally always like to advise my clients to maximize their annual contributions to their qualified retirement plans, as well as individual retirement accounts, not to be confused with Inflation Reduction Act, because they dubbed it the same acronym. I don't know why they did this, but they like to make us make our lives a little bit more difficult, I feel like sometimes. The maximum amount of elective contributions that an employee can make in 2024 to a 401k or a 403b plan is $23,000. For 2025, this limit is $23,500. Keep in mind, under the Secure Act, individuals are now able to contribute to their traditional IRAs in or after the year in which they turn 70 and a half. Beginning last year in 2023, the Secure Act 2.0 did raise that age that the taxpayer may begin taking their RMDs to age 73. If the individual did reach age 72 in 2023, the beginning date for that RMD is April 1st of 2025, and that is for the 2024 RMDs. If the taxpayer reached age 73 in 2023, the taxpayer was 72 in 2022, and then subject to the old RMD rule in effect for 2022. Individuals age 70 and a half or older can donate up to $100,000 to a qualified charity directly from a taxable IRA. Keyword there being direct. It can't go out and then kind of come back in. It has to go directly from A to B. For gifts that are made in 2024, the gift tax annual exclusion is $18,000, and for 2025, it is $19,000. Nothing really new or surprising there, just kind of some index for inflation tweaks. On the individual tax return side, there really aren't too many noteworthy form changes, but I will point out several, starting with, in my opinion, the biggest change that'll give us practitioners angst this busy season. Schedule 1 has been updated to allow taxpayers to report transactions reported from Form 1099-K received related to items that are included in error or reported at a personal loss. Also, Part 1, Line 8V, as in Victor, has been added to report digital assets as ordinary income not otherwise reported in income elsewhere. So the crypto crackdown is here. The IRS clearly is, there's a big target out there for it. So do remember that we also have transitional rules for 2024 and now recently again for 2025. If the amount received from a third-party settlement organization exceeds $5,000 from a 1099-K, it will be issued. Personal gains are always taxable. Personal losses are not tax deductible. So do refer to the IRS frequently asked questions, FS 2023-06, for more information on this. There will be erroneous 1099-Ks issued galore. So as practitioners, we really need to be on the lookout for these from our clients, especially now that the IRS has added a nice little line item for these now. I know that I sold $300 on eBay earlier this year, and I already got an email from them saying that they're going to issue me my 1099-K electronically. I'm like, that's way under $5,000, but eBay is basically kicking the can to the end user. They're wiping their hands clean of their reporting, and it's going to be on the individual to make sure that they're reporting. So make sure that you are asking your client the question, because I can guarantee you a lot of excessive 1099-Ks will be issued. Schedule 2 was tweaked a bit. Line 1 has been expanded to accommodate some repayments for that new clean vehicle credit and previously owned clean vehicle credit, which basically says that if a taxpayer purchased an EV and took the credit at the point of sale, but technically weren't entitled to that due to their income levels being too high, they have to repay it with their tax return. So the burden of repayment is not on the dealership, but it's on the individual taxpayer. Other lines were also kind of added and shifted around too on Schedule 2, but nothing really noteworthy. Schedule 3 has been condensed down to one page. Surprise, plot twister. The IRS did get rid of the clutter, finally, yay. So Schedule 3 is only now one page. Now to the business side. Again, we don't really have anything too noteworthy, but we really should address several items that have changed and several items that will continue to change. On the depreciation front, we have, of course, begun our bonus depreciation phase down, which I previously mentioned. There have obviously been rumblings about restoring depreciation back up to 100% bonus, but honestly, I don't believe anything until I see it these days. But with the election, now anything is possible. So make sure you're educating our clients, and if cash flow does permit, have them accelerate their purchases to take advantage of the higher bonus depreciation percentage for 2024, because we obviously do know what it is, or perhaps just, take 179 if you're able to. Hopefully this should be common sense to many at this point, but make sure your clients are evaluating their year-end cleanup items, such as their accruals, their bonuses, their commissions, their prepaid expenses, and their inventory write-offs. And some ancillary items for 2024, make sure you're answering that digital asset question, yes or no, because again, crypto crackdown is here. Partnerships, they do have those additional informational disclosures dealing with the basis related items, as well as some additional checkboxes on K1 relating to ownership percentage decreases, as well as guarantees on debt. Do not blow these off. Next slide. And last but certainly not least, our due dates for filing. I'm cringing as I am talking about this, but here we are, Monday, March 17th, 2025. Extension deadline is Monday, September 15th, 2025. And then for our individuals, Tuesday, April 15th, and the extension deadline is Wednesday, October 15th. And with that being said, that's all I have. So back over to you guys in the studio.
Now we're going to turn the discussion to legislative and advocacy. AJ, can you provide, and there's nothing more timely than beneficial ownership reporting. AJ, can you share the latest on those updates?
Absolutely. So on December 3rd, a federal court in Texas ruled to halt the implementation of the beneficial ownership information filing requirement that was part of the Corporate Transparency Act. The court said that CTA is unlikely to be constitutional and issued a preliminary injunction barring enforcement of the CTA and its reporting requirements. The ruling states that, quote, reporting companies need not comply with CTA's January 1, 2025 BOI reporting deadline pending further order of the court, end quote. So it is advisable for businesses that have not filed their BOI reports to still gather information for their report in order to be ready to file if the ruling is reversed. The AICPA, NJCPA, and other state CPA societies are continuing to advocate for a delay in the filing deadline due to a lack of awareness surrounding the BOI requirements. Last month, we surveyed members about their firm's position on the BOI filing. 35% of the 480 respondents said they are assisting businesses with BOI reports. 45% said that they have alerted clients that their firm will not be assisting with BOI filings. And 19% were either still deciding whether to help clients or are holding off in anticipation of the deadline being extended. And of the respondents who are assisting clients with BOI filings, more than half said that 25% or fewer of their clients have filed as of when the survey was fielded in mid-November. So the one thing that this tells me is that we're at a point of uncertainty. And while we have the latest development about the delay and not having to file by January 1, we know that amendments are amendments, so they can change. And we just need to pay close attention to any new developments around this. And AICPA is pushing for a delay for January 2026. So NJCPA and other state societies have also supported that effort.
And signed on to the letter, right?
And signed on to the letter. So that's where we are.
So you can visit the link on your screen for more BOI news and resources and events. Moving now to the recent election, we have Dr. Ben Dworkin, Director of Rowan Institute for Public Policy. He recently appeared on the IssuesWatch podcast, and he'll be providing us a post-election analysis.
Mm.
I think it's going to be dramatic. I think the kinds of things you have to look for, there's a bunch of them here probably. So I think there's going to be a real threat to the Fed's independence. One of the things that, has made the United States different from a lot of others is the way the elected government deals with the central bank. People can be disappointed. I wish they would have lowered rates. I wish they would have raised rates at a certain point in time. But you can say something in the press, and that's about it. Now we're talking about there may well be much, that line, that bright line that has divided and kept the Fed's independence from the elected class, a very strong dividing line, that's going to be weakened under this next Trump administration. So that's going to have tremendous effects on monetary policy and therefore the overall economy. Tariffs, something that Trump has talked about. I think they're very likely. I think what we know from the first Trump administration that he is very transactional. And so tariffs might be ready to be imposed on any number of different countries. But if you're China, you can buy your way out of it. Promise to buy, $20 billion in, or $1 trillion for that matter, in American grain, and then we won't give you the tariffs. That's the kind of thing. So then suddenly you've got huge foreign investment in America, but they get out of the tariffs. I don't know if Mexico is going to be able to do that if tariffs are imposed there. So we'll have to sort of see how it plays out. Tariffs are going to be proposed, but there's going to be, I would expect to see these kind of backroom negotiations. The cutoff of migrant labor, right? We fully expect at this point, given the prominence of the issue, they're going to, if not a wall, they're just going to put everybody in line and they're going to stop everything they can, anyone from coming across the border without proper documentation. So what happens when you do that? Well, there's less migrant labor. And when there's less migrant labor, there are going to be plants, and produce and agricultural products that can't be picked up in time. So they're going to rot on the vine because there aren't enough people to go out there and to pick the grapes and to pick the apples and to pick the oranges and everything else that needs to be done. So suddenly you're going to continue to see higher prices because of the labor shortage. Look, if the Republicans imposed it under the first Trump administration, I seriously doubt they're going to get rid of it. They didn't get rid of it then. I don't think they particularly care for New Jersey and New York, which are places that where this is a major issue. So I don't think anybody should expect that to be eliminated anytime soon.
That was an interesting take on some of the possible priorities of the new administration. One thing that's been noted by pundits is that trifectas don't last long. So the Trump administration will have to move quickly to implement some of their most pressing priorities. One thing that we all expect is some form of tax act, perhaps a reduction in IRS funding, I don't know, and a restructuring of the PCAOB board. Those are just things we've heard. Carla, what are the AICPA's post-election activities or priorities?
Yes. Now, don't worry. I went to our very own Mark Peterson for an update. I will say that there is a lot that's happening. And so I'm just going to cover a few here that I thought that people would be interested in. So first, new members of Congress and key administration officials, right? We have 10 new incoming U.S. senators. We have 63 incoming freshman members of the House of Representatives. So the first couple of months, AICPA dedicates time to meet and greets, right? So setting up meetings to introduce the profession, advocacy issues, connect with members and their staff to ensure that they have a profession point of view and that they have contacts. So if they need clarification of anything that comes up, they know who to go to, especially with a likely tax package. As you mentioned, we need to sort of lay the groundwork for our members and for members of Congress to understand who to reach out to, right? If they need input on interpreting difficult tax position, and that's the role our advocacy team plays, right? So, and these introductions aren't limited to members of Congress. It's really any key administration positions that are appointed and confirmed will work to introduce or reintroduce the profession to these officials. So that's an immediate priority. Second, PCAOB. You mentioned the PCAOB structure, and I'll mention I don't know if they call it DOGE, DOGE. It's this new Department of Government Efficiency, right? I have to figure out how to say that acronym. But in President Trump's 2021 budget, he recommended a restructure of the PCAOB into the SEC, which we believe would cause alarming consequences in audit quality. And so we're keeping an eye on the newly appointed, they call it an extra governmental pseudo department, this Department of Government Efficiency, and recommends massive changes. We're thinking that this could be in there. So we're carefully watching for any recommendations about the PCOP and will advocate that it remain in place. Okay, that's the second. Last, you mentioned tax. The 2025 year is going to be a year of tax. Okay, so it's gearing up to be a heavy tax year. There's potential for 1 or 2 tax reconciliation bills to extend the TCJA provisions, maybe offering expansions or other legislative opportunities for long-held profession tax priorities. And we'll be closely working with the Senate Finance, House Ways and Means Committee members, as well as other committee members on legislative priorities, which include mobile workforce tax simplification, obviously the TCJA business relief, which I already talked about, expanding use of the 529 for CPA exam, test prep, those kinds of things, extending Section 199A deduction, expansion is unlikely, and then lift from the 1099K threshold, which we just heard about in the permanent disaster relief provisions. So those are a few. I encourage anybody that wants the full advocacy update to tune into the town halls.
Yeah,
Yeah,
does a
CPA
great
town
job.
halls. Great, yeah,
Great
great job.
resource.
Yeah.
Terrific resource.
Here in New Jersey, we'll be electing a governor in 2025. The New Jersey Business and Industry Association's annual Business Outlook Survey asked business executives what's on their wish list for New Jersey's next governor. June, can you share the results?
Oh, sure I can. So the respondents were asked to select the top 3 actions a new governor could take to have the greatest positive impact on their business. 23% ranked lowering property taxes as their top priority. Reducing health insurance costs and lowering corporate taxes rounded out the top 3, followed by reducing business insurance costs and helping find skilled workers. When it comes to the workforce, 55% of respondents said their business was challenged to find appropriate staffing. This percentage held steady from the 2023 survey. 77% of those respondents said there were not enough candidates. 68% said candidates lacked the required skills or qualifications. When asked whether New Jersey lawmakers have done enough to address business affordability in the past 12 months, only 4% of respondents said yes.
June, you and I attended NJBIA's Public Policy Forum. So we had a chance to hear quite a bit more detail around some of this. And the one thing that strikes me is that New Jersey is now an outlier as it relates to the corporate tax rate when we look at, our neighbors in New York and Pennsylvania. And so these are really important topics. And some of the other topics that came up were affordability and inflation and supporting industries and innovation. So,
right. New Jersey had benefit from all of the COVID funds. And now that those are done, we are back to what they often refer to at the event at the fiscal cliff again.
yes.
So, and I also know they mentioned that Governor Murphy had recently given an edict to the departments for various reductions to the budget.
Right. So it will be very interesting to see what happens.
I know, and I saw in the report that it did say the cost of doing business in New Jersey is the most troublesome problem for businesses across the board. So certainly something for the next governor to work on. How about in Massachusetts? Do you have these same issues?
Yeah. Yeah. I mean, there's always, I think all the states are facing the same issues for sure.
So moving on to NJCPA legislative and advocacy activities, we had AJ, can you tell us a little bit about what we've been doing?
Absolutely. So we held a very successful CPA day in the state capitol in October, and dozens of members gathered for lunch and presentations, followed by a visit to the State House to meet with lawmakers and convey CPA legislative priorities. And the one thing that I will add is that we're committed to hosting the next CPA Day in 2026 and continuing this effort, which is really important. And to your point, Carla, we do this because we need to keep the profession's point of view front and center. There's a lot of issues and, priorities. Everyone thinks that their issues are priority. And so we definitely wouldn't want our message, our needs to be lost among all of that here in the state. So we're also looking forward to the return of the New Jersey Chamber of Commerce Walk to Washington this February. And we encourage all of you to attend. We want to make sure that the accounting profession is well represented. And you can learn more about that via the link on the screen. And the one thing that I will add is that we will have a presence there. And it's a great the state chamber, NJCC, has just been a wonderful partner. And it's so important that we keep our issues front and center. And we expect a lot of energy and the gubernatorial candidates to be there. So it's something that I'm looking forward to attending. I know you've attended also.
I've attended in the past several years. It's a great opportunity to meet the legislators. They're usually in at least one car of the train, so they're a captive audience, and they're willing to speak about the issues that impact our businesses and residents of the state. So it's a great opportunity.
So we always will urge you to contribute to the New Jersey CPA Political Action Committee. It's a nonpartisan PAC, and we contribute money to candidates who demonstrate a positive concern for those issues that are important to the profession and to the business community. So please consider making a contribution to the PAC at the link on your screen.
We also, our PAC is going to be doing an election, and there's opportunities to serve on the PAC board. So if anyone's interested, I encourage you to update your volunteer interests and let us know.
That's great.
Perfect.
I'll now turn the program over to Maria Scarata, Director of the New Jersey Division of Taxation, for her update.
Thank you very much, Teresa. It's always a good day when I get to speak to the society, and I'm very pleased to be here. I'm Marita Scarata, the Director of the New Jersey Division of Taxation, and I'm here with some updates about what's going on in this last quarter of 2024 with the Division of Taxation. I not only encourage you to ask questions and post them here in the chat, but also if you have a question that I can't answer in my limited time, be assured that the NJCPA is going to forward any unanswered questions that are submitted during or post presentation to me for response. Okie dokie, so ready, here we go. In general, I'm going to start talking about the basic housekeeping things that are going on around the division. As always, this slide that you see in front of you, I think is the most important slide that I could present. And then I will wax on a little bit about it's extremely important that all tax practitioners be aware that the Division of Taxation offers a tax practitioner hotline that is exclusively for the use of practitioners, whether they have questions about their business clients or their individual income tax clients. We endeavor to provide some kind of immediate service to you in order to answer your questions, whether they be guidance pre-filing or certainly questions about notices or post-filing concerns. Again, you can see here on the screen the practitioner website. I'm not going to read it off to you, but I really would encourage you to go to that website as often as, at least once a week or so, and check to see if there are any updates that are posted to the Division of Taxation website that might have an impact on your filing season. The practitioner email address, I would highly encourage for those of you who have expressed some dismay over the difficulty in getting through, particularly in the last couple of weeks, to the practitioner hotline. I will admit it is glutted right now. We, as you're probably very well aware, we are in the last little bit. We just closed out the third annual anchor filing season. The deadline for filing was December 6th, so that was last Friday. And we're doing a lot of cleanup and taking calls and speaking to taxpayers about their anchor concerns. And unfortunately, that is having an impact on the availability of our people to answer calls on the tax practitioner line. We had to pull a few people off to answer anchor calls. And we are also engaged in training so we can bulk up the staff in time for filing season. And that means that, unfortunately, some folks who are dedicated to answering the telephones in the tax practitioner call center are being pulled away to do training. So it's a continual balancing act, and we ask for your continued cooperation, support, and I understand any frustrations. But again, I will stress that getting through, if you need a response, I can assure you that I was just told this morning that we are at a 5 to 7 day turnaround on emails, sometimes faster, for the tax practitioner hotline in particular. So I would very much encourage you to load any questions that you have into that email. Again, the hotline numbers are posted up here. For individual tax, 609-633-6657, and for business tax, it is 609-633-6908. We do have the portal that's listed here. We would encourage people to use the portal as often as possible rather than send in snail mail. It's a much faster way to get the material into our system that allows us to sort material and stamp it and track it much faster than what we would get vis-a-vis regular mail, because the regular mail comes in and is scanned and assigned a document locator number in the same manner that it does when it comes through this online portal. But obviously you can save 2 to 6 days, whatever the mail delay is, and having that opened and extracted and scanned and so on and so forth. So yes, highly encourage that the portal be used. Again, there's also the contact form down here to look at. Let's see. The appointment scheduling system that we've talked about before in earlier issues watches, I actually stated that my expectation or understanding is that we would be able to launch an appointment system through the tax practitioner hotline sometime in maybe late December, early January. I've just been informed by staff that that is an unrealistic expectation. Unfortunately, they are, because of lessons learned using the appointment system through this last anchor season, we intend to roll it out for the tax practitioners, but it probably won't be until February or so, possibly March, but at least it will be, we want it up and running during the height of tax season. So that will afford an opportunity for tax professionals to make an appointment through our website to have a taxation person call you back so that you're not sitting on a line, that we can meet you where you're at. As we've talked about before, the Division of Taxation has engaged in some considerable hiring exercises over the last 12 months. We've pulled in 250 approximately new hires. Unfortunately, that pool of new hires does not include a lot of auditors, as you're very aware, as it was spoken about in earlier segments. The competition for folks coming out of a college situation with adequate numbers of accounting degrees that are viable candidates to work in audit with the state of New Jersey is slim pickings. The competition is fierce between the private firms, the public sector. The IRS isn't helping this because they've had some been able to pull a number of seasoned auditors from many state and taxing jurisdictions around the nation. It's one constant conversation that is had amongst tax directors and commissioners around the state when we get together, talking about having lost a fair amount of talent. New Jersey has lost about 10 or 12 master auditors to the IRS. At this particular point, the IRS has an unbeatable pay scale and a signing bonus that we are not in any position to provide. Who knows what's going to happen with the upcoming changes in the administration. We are keeping a very solid eye on what is happening with the IRS, potential changes in leadership, what that could mean with either executive orders or possible legislation with the new Congress. and how that might impact tax law in New Jersey. So be assured we will keep you up to speed as best we can with guidance as it relates to tax law and the influence that things that happen at the federal level do impact in New Jersey. Another way that we're looking to continue to hire folk is, again, same idea as what is being done in the tax professional world, which is recruitment at job fairs. We go to business classes, accountancy classes at colleges and universities around the state, talking to them about public service and what life would be like as an auditor in the state of New Jersey. The Division of Taxation is fortunate when we do hire. We are one of the highest paying starting salaries in state service. So that can be fairly attractive to people. Oh no, I forgot to put my timer on. Nuts. We are also home growing our own auditors. What that really means is that we started to integrate taxpayer service representative professional level titles within our audit areas to do some of the non-audit work, expose people to what happens in our audit activity and what other opportunities there are there. And should someone be interested and have the ambition to start taking accountancy classes, we do have a generous tuition reimbursement program that we're hoping to, as I said, home grow our own auditors. Right now, there are no super significant changes in tax that I need to really discuss at this particular point, although some of you who may represent new car dealers who are engaged in the sale of zero emission vehicles, ZEVs, there is a slight change in protocol for those folks. You may be aware that beginning on October 1st, 2024, sales tax is now being imposed on ZEVs at a half rate of the predominant sale or the prevailing sales tax in New Jersey. And then in July 2025, July 1st, it'll go to the full rate. For a while there was a request that the car dealers submit ST for ZEVs for sales and leases. We've eliminated that requirement and are relying since specifically on the car dealers because we know that they can program their accounting systems to charge the correct tax. We're not really too much worried about that. And just to keep an eye on this, direct file participation, New Jersey is still anticipating fully participating in direct file, which may or may not have an impact. You may or may not see an impact within your own practices. For the most part, I think people who are able and willing to use a private firm will continue to do so. There is some hope, though, that compliancy amongst people who are less inclined to file or find this to be a very difficult process for them, even though they have perhaps a lower income bracket, will take advantage of direct file. We'll see more about that. We expect to roll that out hopefully the end of January. Just a real quick thing here is that the IRS Commissioner Werfel created a working group to combat cyber crimes and fraud. The purpose is to limit the impact of scams, including things with ghost preparers and scams that are circulated on social media outlets like TikTok. This group is called the Coalition Against Scam and Scheme Threats. The government likes to have catchy acronyms known as CAST. That program is something that the Division of Taxation will be cooperating with the IRS and a number of other states to see what we can do to add our own strength and support to that. I should tell you that, as mentioned before, briefly, when it comes to local property tax relief, Stay NJ is the new kid on the block. That is simply a legislation that was passed several years ago and then updated most recently at the end of October to allow additional methodologies for folks who are 65 and older to gain tax relief at the property tax level. This simplifies the filing of not only the property tax reimbursement program known as the Senior Freeze, the Anchor program, but also this new level of taxpayer who are 65 and older, who may be making more money than they can in order to participate in Anchor or the Senior Freeze program, but who earn up to $500,000. And there's so the state program will allow them to stay in their homes with some reduction of up to 50% or $6,500 in a full year. In this first year, it'll be $3,250 of property taxes. Again, all of these programs are always subject to appropriations through the state budget, so keep tuned to that. Just to give you a quick wrap up of Anchor, we have paid out over $2.1 billion to 1.8 million taxpayers. As I mentioned before, the deadline ended on December the 6th. Over 14,000 taxpayers used our walk-in or virtual walk-in services during the month of November, and our call center received over 519,000 calls in November alone. So as you can imagine, that the number of calls that we're getting, if we staffed our call centers magically with 2,000 people, I don't think we'd still be able to answer all these telephone calls. So again, not an excuse, but a reason why there is so much congestion in our call centers. I'm just going to say one more thing about STAR, which is our state tax and revenue modernization that is ongoing. We are moving along with very soundly with model office testing and things that just don't make a lot of sense to the rest of us who aren't technologically empowered. But I do want to point this out to you, a couple of the key things. One is that the first family of tax that we're going to roll out for the system is still sales tax. The launch date for STAR will be March of 2025. Initially, we had hoped for a February launch date, but it is now firmly centered in March of 2025. We expect that you're going to see a seamless transition. In fact, you may not even know when this actually happens, but what you will see after the integration goes into place, the access to a portal, should you want to, which will provide a great deal more transparency to things that are currently behind the veil, not only for you as a tax practitioner, but also for our own employees here at Taxation. So we'll be able to see any notices that went out, any correspondence that was sent in, all transactions that have occurred in the account as of the transition will be available on site for taxpayers and practitioners alike. So that's the big skinny. There's really not too much else to talk about. The CBT regulations, we're still waiting on word for those to be published. Stay tuned. We'll, of course, post that on our website as quickly as we can. Again, if you want to submit questions to the Society, they will forward them to me for review and response. I do not think I'm going to have time to answer that because I am at the end of my time. So it's been a pleasure speaking with you, and I'm grateful to have this time to share this information. Thank you for the opportunity, and I look forward to seeing you again next season on Issues Watch with the NJCPA. Thank you very much. Have a good afternoon.
Thanks, Marita. It was great having you. With the three of you here today, it's a good opportunity to talk about leadership. AJ, you recently started a thought leadership series. Can you tell us why you started it and why it's important?
Yeah, so I started it on LinkedIn, and I wanted to hear what others were doing and how they were adapting their leadership style to the rapid changes in our environment within their companies and firms. And so it was just a way to get more input. And I would say it was well received. And so I was very happy about that. So we'll continue this to get information. We talk about it internally, what are our challenges within a rapidly changing environment? What are the challenges to the profession locally in our state? So we talk about this all the time, and I think it's just nice to hear other perspectives. June, I know you commented on LinkedIn too, so thank you for that.
Oh, you're welcome. I try and use that and share. It's a great platform. And in terms of leadership, my style is collaborative. And everybody knows I have an open door policy. I like to empower everybody in the team and give feedback, and I like to challenge them as well and put them outside of their comfort zone. I'm often outside of my comfort zone. I just, don't let them see you sweat. So, but I think it's important to, lead by example as well.
For sure. Yeah. So I have a favorite quote when it comes to leadership, and it is, Anybody can be a leader, but a title doesn't make you one. I don't know who said it, but there's a lot of truth to that. I have that on my desk. I believe leaders are the guiding lights for their teams wherever you sit. And a little bit about my leadership. When I think about what's made me successful, I think leaders need to have high EQ. You need to be able to read people, match and mirror, so to speak, because you need to build trust and influence as a leader. I think self-awareness is really important as a leader. And so in order to have self-awareness, you need to encourage feedback, and critical feedback change the trajectory of my leadership style. So I think that's really important. Seek out feedback. Self-reflection. As leaders, when you find yourself in a leadership position, I think it's really important to reflect on, how did I get here? What were the competencies? What did I do that got me to this point? And then you learn a lot about yourself. So I'm a really big proponent of self-reflection. I think we need to demonstrate skills in vision and strategy. We have to have a desire, at least for me, I have a deep desire to help other people succeed. And so when you help other people and you're an effective communicator and you can build that trust and influence, that's when the magic happens and you can get a lot done. And just being inspiring to others. If you can do all of those things and do it in a genuine and kind way, then you become an inspirational leader.
I think that's absolutely correct.
Yes.
Making sure that, your team knows you're genuine, that you really are looking out for them and trying to get the best from them.
Right.
Right. It's
From them and for them.
Yes.
Together.
Yes. It's a team effort.
Exactly.
Yeah.
Next, we'll talk about the future of firms. Wilkett and Guttenplant recently introduced a new managing partner after years of leadership from Ed Guttenplant. June, how has Dan maintained your firm culture and adjusted for the new generation of workers?
Well, WG was founded by our two Eds over 40 years ago. I think we're going close to year 42. It is a transition of people first. It always has been a firm culture of people first, I should say. The transition with Dan is Dan started his entire career with the firm. And like others in the firm that have grown up there, they've, gone into leadership positions. It is a culture of transformation. So we try and grow and develop, encourage to bring out the best of each team member, right? We want them to develop and be their best selves. In this environment we are remote, like your firm, we are very, very intentional about firm culture and maintaining that and share values. So when I came on, I had my own firm for over 30 years. It wasn't even on my radar. And I met Ed G through the State Society. I met members of the team over the years. I was very impressed with them. And when I spoke with them, I said, what would make me transition at this point in my life? And I said, community, sense of, firm culture. So they mean it, they live it, they breathe it. I should say we. It's not something that's, a marketing pitch. And it's that common shared values among all of the team members. And we refer to ourselves as the WG family. So it's very heartfelt.
I love it. It's music to my ears.
Right? and you, Carla, you had said that, I remember what you said, and I went back to Ed G and to Dan, I said, it's like a mirror image of our firm, the shared philosophies.
Yes, yeah. I mean, I sat in a managing partner seat in 2011. When I was growing up in this profession, it was not people first. It was very much client first, firm second, individual third. And I started out to flip that script to people first and client second and firm third. Because if you have happy people, you'll have happy clients. And if you have both of those, the firm will be successful. And that has played out given our growth. From 2011 to today, we've gone from 16 million and we'll end this year at 73 million. So, wow. Culture matters, yeah, right? Culture matters. And when I think of when you said new generation, I think it's just the generation now just isn't accepting how our profession has worked. So I think all firms need to think about, how do we leverage technology in order to leverage human time? How do we work smarter, right? How do we measure people on output versus input? We are work from anywhere. And, hours have gone down, but profits gone up. Is that a problem? I don't know, but everybody uses hours as a crutch. And so we have a transformation director who has been really creative in rolling out new programs of how to manage remote teams, because it's not one size fits all. And I think if our teams know they have flexibility in how they're managing their people, when people are sitting, we have employees in 22 states, and, so it's not everybody has an option to come to the office. And I'm not a fan of one size fits all, and I'm not a fan of mandates. And so I've changed our culture to lead with context versus control. So a lot of our policies have changed over the years with that in mind. After reading the book, Netflix, The Culture of Reinvention, it's way end on one end of the spectrum because it's a tech company, right? But the whole theme of that book is how to lead with context versus control, and we're professionals, right? So the other thing I built into our culture is transparency. I think people need to understand how they fit into the company. What does it take to get to the next level? That's why all of our competencies are written from staff all the way up to partner. We're very transparent about what it takes to get to partner, what are the firm metrics that need to be met. All of that. I do a state of the firm video every year to talk about the good, the bad, and the ugly. How do people fit into our success and our growth? And I think that's really important. We had a good year this year. We just announced at our holiday party on Friday where we gave every employee a thank you bonus. Because it's a team effort. It's not just the most tenured or the most senior or the partners. Everybody, both internal and client facing, play a role in our success. And so, yeah.
Yeah, and NG has always said that, we've continued the core value that putting people over, the dollars. So we would not tolerate a client that would be abusive to a staff member, regardless of what that revenue is for the firm.
That's right.
It's people first.
Yes, and right sizing clients makes a bigger difference than I think people think.
I agree.
And you replace the revenue real quick.
You do.
Yeah.
So Carla, I want to turn over the conversation a bit to some of the things that we're seeing, mega issues that are impacting firms. And one is private equity and mergers and the impact that it's having on the profession. And so I have multiple questions, and you can pick and choose however you see fit. So one is the overall impact on the profession. The other is, when we think about our younger generation, do you think they're paying attention to that as it relates to, the M&A activity, PE? Do you think they're paying attention to that? And then if so, what's the impact? And then last but not least, do you think that there will be a cooling off period with some of this activity, or do you think that it will just continue to increase?
Okay, so there's a lot to unpack in that. PE is accelerated. M&A has always been prevalent in our profession, right? But PE is accelerated that, right? So what we have now in our profession is a choice of type of company that young professionals can choose to work for. So they can think about what motivates them and align with the company structure. So we have private equity, which operate under alternative practice structures. We have ESOP, firms that are owned by ESOPs, and we have traditional run firms. I put ourselves in that, though we're not a partnership, and we've evolved our governance probably 4 times at least since I've been sitting in a managing partner seat since 2011. So we have a 7-member board, right? So we're not making decisions. So when people say a traditional firm is just X, it's not exactly right, because you have traditional firms that have kept up with how to be agile, keep money. We keep money and reserves in our firm every year. We don't drain it. And we've been able to invest in technology and be leaders in the technology space, right? And so there's all these different options, which I think is good for the profession. I mean, right now, I've only seen PE just using the capital for an M&A strategy. So buying up firms, I mean, the well has to slow down at some point. I would think there's only so many that they can buy up. I'm looking forward to when they're really infusing capital into technology initiatives. So I haven't seen it yet, but I'm sure it's on the roadmap and the plan. It'll be interesting to see how the firms and alternative practice structures, grow, because you're really, take commercial audit. We were talking about that earlier. You're taking the assurance people and and the tax people and putting them in separate organizations, and how does that affect client service when, I don't know about your firm, but we always have sort of this communication hurdle with both sides, right, of the client service team. I think it's too early to tell, quite frankly. I'm hoping that this is a net positive for the profession. I think they're probably not all going to work, but hopefully we don't have too many that don't. And so I'm looking forward to that. As far as your comment about staff, I am waiting, and I do hope that the firms that have taken this actually are tracking the data and will share it. I haven't seen any data on retention or attraction yet. And I don't know if that's too early, how they're measuring it, whether they'll be candid with that or not. I don't know. I haven't myself heard of anybody, but I haven't also gone out to seek the information about how young professionals feel about it. But we don't have a hiring problem, and we have lots of people knocking at the partner doors, wanting to become a partner in our firm, that we are looking for ways to accelerate growth, for example. So I think there's a fit for everybody, and it's really making sure we're balanced, certainly as the AICPA, in how we're talking about all the opportunities. There isn't, and it's not one size fits all. So
I really appreciate that. Just, it's not, private equity is not a silver bullet. It doesn't, but I think what it does is allows for conversation around being competitive, right? And where do you put your investment, like technology, other developments. So I think that it does open up the conversation at least.
Yes, and I will say firms should be holding back reserves. They need to figure out what they need to invest in and prioritize it, have a tech strategy. And, firms that, we get approached all the time with firms that are looking for a merge up situation. And if they haven't kept up with technology and how we work today, the value isn't there all the time. And I'm sure private equity must be looking at that growth potential too of the firms before they roll them in. Yeah.
Mm-hmm. Yeah, this is a great discussion. I think there's more to be said on this, and certainly more to come, right? We'll talk about that. As we wrap up the program, I'd like to highlight several NJCPA programs and services. The deadline to apply for an NJCPA college scholarship is January 7th. We offer both $2,000 and $6,500 scholarships. You can learn more at the link on your screen. I'd like to highlight 2 NJCPA member benefits that are available via the NJCPA Marketplace. You can also see them at the link on your screen. The first is Plymouth Rock, which provides members with a 15% discount on auto insurance. This offer can be combined with discounts up to 50% for safe driving, paying a policy in full, and carrying homeowners insurance through Plymouth Rock, and more. This is our most accessed member benefit. Your company or your clients can also save on credit card processing fees by enlisting the help of Merchant Advocate. They work with your existing credit card processor to lower the rates and eliminate hidden fees. Merchant Advocate has helped many members, and even here at the NJCPA. Lastly, don't miss our next 2 Membership Plus webinars on January 9th or 16th. Learn how heart-centered leadership can enhance your confidence and provide strategic direction. And on January 30th or February 5th, gain insight into hiring and compensation trends as Frank Karlinski from Robert Half returns to review their 2025 salary guide. So that wraps up today's broadcast. Many thanks to Carla, AJ, June, Marita, and Nicole. And again, many thanks to Mark Demetrio and Guaranteed Rate for sponsoring this program.